8359, providing services to individuals and families ages 0 to 85. We educate and provide options so you can make informed decisions. We're the Insurance Gap. 252-367-8359. Thank you, the Insurance Gap, for your support.
Welcome to another live show here on Awesome Radio. We thank you so much for spending your day with us. I'm not going to say a half a day, a part of your day. I'm saying all of your day. Thank you so much for spending all of your day here with us at Awesome Radio. This is a live radio show. It's called Let's Talk Insurance with Tissany. And Tissany is my very special guest in the studio on today. If you are watching us social media, then you can go to our Awesome Radio Facebook page, our Awesome Radio YouTube page. You can listen from our website at wbisawesomeradio.org. wbisawesomeradio.org. We are streaming also from Roku TV. We are on the Apple app, the Alexa app, and the Android app. So if you have Alexa, just say, Alexa, play Awesome Radio, Winterville, NC. And there you will have us, and you can take us with our mobile apps truly everywhere you go, from the East Coast to the West Coast, from north to south, and all beyond too. We're Awesome Radio. All right, so this show is a 30-minute show. Let's talk insurance with Tissany. Tissany, hello, and welcome to today's show.
Hello, Akila. Thank you so much for having me.
All right. So the name of your insurance is the Insurance Gap.
That is correct.
All righty. Now, do me a favor. Pull the mic just a little bit closer to you and speak directly into the mic. You might have a little bit too high, but that's okay. Okay. So you're going to educate us about insurance. So what types of insurance there is out there, what your expertise is, and why is insurance so important?
Yes, it is very, very important. I have taken it on as a personal initiative to share with the community about the importance of insurance and why you need it. You know, we have come from the stigma of a place where, oh, we don't need insurance, I'll get it later. Oh, I'll take it later. It's not important right now. Oh, I need to hold on to my money. But essentially what you're doing is you're holding on to something that's not going to benefit your family. If you have it, and you want to be able to take care of your family and of your past, it's best to start planning for that. And that's including our financial planning. And unfortunately, within our community, it's not something that we're educated on. It's not something that's talked about a lot. Because we come from a place sometimes where we don't always have it, or our parents haven't had it, our grandparents didn't have it. So it was not talked about. It's not something that we were educated about growing up.
Okay. So can you do me another favor?
Sure.
Pull that mic directly in front of your mouth.
Directly in front of my mouth.
Yes.
Okay.
So you can be picked up very loud and clear on radio. Okay.
Okay. How about now?
Perfect. Yes. Thank you so much. So the number to dial in is 252-756-2008. I didn't even ask you if you were taking calls today.
Oh, we can.
Okay.
We can. That's what I'm here for.
All right. All right. So let's talk insurance with Tissany, filling the gap of your insurance need. Tissany, what type of insurance is out there?
So there's typically three types of insurances. There's whole life, term life, and universal.
Mm-hmm. All right. So explain what is whole life.
So whole life is going to whole life is going to ensure you provide insurance for your entire life, but you're going to pay for it for a short period of time. It builds cash value. It has terminal illness, critical illness, and nursing home confinement. That's already built into it. Term insurance is something that you're going to pay for. It's going to last you for a short period of time. So typically you have to renew that term after 20 or 30 years. And then you have to show insurability again at that point in time to be able to qualify for that term product, which does not build cash value. It does not include accidental death benefit. It does not include terminal illness. It does not include critical illness.
Okay.
And the last one is universal life. Universal is tied to the stock market. It's tied to the S&P. So we know how the stock market has been in fluctuation back in 2008 and back in 2020 when the midst of the pandemic started, right? So which means your money is going to be in fluctuation with the universal plan.
Okay.
So they'll cap your earnings at 2% earnings.
So then which is better, whole term or universal?
Well, I like whole life because you pay for it for a short period of time. Now, let me ask you this, Tequila. When you got a mortgage for your home and the paperwork that you signed with the mortgage company, they said you're going to pay for your mortgage for 30 years, right? And now they have programs where you can pay your mortgage off within 15, 20, 25, 30 years, right? Why would you want to pay for life insurance any longer than that?
Any longer than perhaps 30 years?
Mhm.
Why would I want to pay for that?
Mhm.
I don't know.
So anything past the 30-year mark, is that benefiting you or is it benefiting the company?
Okay, gotcha. It's benefiting the company because it's coming out of my pocket every month.
Exactly.
Okay. But then if I pay for 30 years, then that's a guarantee that I have insurance so that if something were to happen to me, then my family will be taken care of, right?
That is correct. But I should have brought my iPad in because I'm a very learned artist that everybody is. If you have an insurance policy that you took it out, let's say for $5,000. And I chose that amount because what I've run into is a lot of people who have purchased these $5,000, $2,000, $3,000 policies, and they purchased them back in the 1980s. Here it is now, this is 2022. Now, it broke my heart. I sat down with the family, and she had a $5,000 policy that she was paying off since 1988.
Okay.
So here it is now, this is 2022. And the reason why I chose that number is because it was significant. Like I said, it really broke my heart because you're paying for something that you have already paid for, right? She paid for it 3 times over. The insurance company is not going to give that additional money that she's paid in premiums to her family because her policy is for $5,000.
And so my assumption is she was an elderly person.
That is correct.
Okay.
So that's another thing. You know, I go out a lot of times and I sit down with families and I go over their policies. I do a free policy review because I want you to understand what you have and what you're paying for. And a lot of times, some of these people come out to your home and it's all about collecting that monthly premium. They're not taking the time to do a policy review with you to say, okay, hey, Ms. Thickpin, let's take a look at your policy. Let's see what you have. How much do you have to pay for it? What's the place on your policy? How's it benefiting you and your family? Does it come with any additional living benefits? And 9 times out of 10, it doesn't. And it's because nobody took the time to go back over that policy with them to ensure that they're getting what they're paying for.
So then if I have a policy right now, I did not purchase it with your company, the Insurance Gap, you will come to me to do a free policy review.
Yeah, so let's just back up. The insurance gap is what I'm promoting because I want to be able to fill the gap of your insurance needs. I'm an independent licensed broker, which means I have the ability to write business with multiple companies, including Mutual of Omaha, Liberty Bankers, For Your Neighbors, Transamerica, just to name a few. So, and the reason that is because everybody's level of health is not going to qualify them for a preferred plan. So I have the ability to write business with any other company, about 20 companies that I have, to ensure that we're going to qualify you for the right program that is specifically designed for you. And the reason I said specifically designed for you is because insurance is based off of age and health. The younger you are, the healthier you are, you qualify for a preferred plan. The older you are, let's say with diabetes, high blood pressure, a little bit of gout, you qualify for maybe not a preferred plan, but a standard plan, and then I can write you insurance with another company.
So tell me the difference between preferred and standard.
Okay, so insurance companies, they're based on risk classifications. So the healthier you are, you qualify for a preferred plan. If you may be just a little bit overweight, and insurance companies look at that as well. So you may not qualify for a preferred plan, but you can qualify for a standard plan.
Okay. So preferred again is preferably that you're healthy.
That is correct.
Okay.
You're
And
less of a risk.
okay. And is that policy higher or that premium higher than a standard?
No, ma'am.
Okay. Now, if I were on a standard, will I get the same treatment as if I were on the preferred plan?
Absolutely.
Okay. So then, if I would get the same treatment, then what is the difference other than my health risk, maybe?
And that's it. So insurance companies, they have you apply for insurance. They ask for your demographic information. And the reason it is because they're going to go and they're going to check with what's called an MIB, which is the Medical Bureau, the Medical Information Bureau. And they're looking at your medical history. They're looking at your history of prescription medicines. Now, that is very important because a lot of times people do not know that if you are prescribed prescription medication, depending upon what you're taking it for, it's going to determine what level of insurance you qualify for. Now, for example, I had another family that I was attempting to help. Now, the more honest you are with your person that's assisting you to get insurance, the better it is on for you. And the reason I say that is because I spent 2 hours and 36 minutes with the family, and I had written them with two companies. You know, they said, "Oh, well, my health is great. I'm not taking prescription medicines." So I said, "Okay, well, great. You'll qualify for a preferred plan." I quoted them an amount, give them the time that they're going to pay for, which was great because it was in the confines of their budget. And that's another thing that's very important to me because I want to make sure when I'm done with your application, when I leave here, we're still friends and I'm going to take you in as family. So I always ask that, what is within the confines of your budget? Because that's important to me. I want you to be able to still be able to get gas and still go out to the movies, take your husband out, take your wife out, whatever it is you do in your regular lifestyle of things. I don't want the cost of your insurance to affect that. So I always ask, okay, how much do you want to be able to pay for insurance? It's not to give your business, it's simply to say, okay, hey, I'm budget conscious and I want to make sure that what you're going to be able to pay for does not affect you being able to go out, enjoy entertainment and different things that you're doing and doing your lifestyle. So what happened was we got through application number one, completed it, submitted it, it came back denied. And I said, Mr. Johnson, I said, well, there's something going on. This application was denied. He goes, well, I don't know what could have happened. I said, well, I'm not sure. I said, are you sure you're not taking any prescription medicines? He said, no, I don't take anything. I said, okay. Have you been prescribed anything in the past 2 years? Well, maybe, but I'm not sure. I said, okay. So we went to another company. It came back denied again. And I said, Mr. Johnson, there's something you're not telling me. So we've applied for two companies and we've gotten two denials. And then Mrs. Johnson comes in and she said, well, baby, do you think it could have been from that time when, excuse me, what time was that and what happened? Well, he was in the hospital about maybe 2.5 years ago. I said, okay, what was the diagnosis? Well, they said that he may have had a stroke, but they weren't sure. I said, okay, a stroke. I needed to know that. I asked you, within the past 24 months, have you ever been diagnosed with heart attack, stroke, TIA, or angina, or anything of that sort? You know, that
What is a TIA?
TIA is kind of like a mini stroke.
Okay.
There's a word for it. I can't think of it right at the moment. But it's basically kind of like a mini stroke.
Okay.
And she continued to say, well, and you remember you had to go to that heart doctor. Okay, this is information I needed to know because it's important to me because what you're not going to tell me is going to come up on that medical report. And the insurance company is looking at that in the background. So if you were prescribed any prescription medications, if you had a diagnosis that you didn't, even if you didn't think of it, it's going to come up. So it's important that you're upfront and honest about your health conditions, previous and current. Any past medications, previous and current. It's important because it plays a role in what you're able to qualify for.
Okay. So whatever happened then? Was he ever written up or he was just denied for insurance?
Well, And here go me. I have this ability to say, well, Mr. Johnson, don't worry about it. Let's just see what's on your MIB. So I took the time to request for an MIB report
Mhm.
and had it sent to Mr. Johnson's home address. So when the MIB report came back, I was able to review it and see what was on the medical history, and then got Mr. Johnson approved for a standard plan
Mhm.
at that particular time. Now, and I pointed out to him, I said, now what you didn't tell me came back on your report, and this shows why you were denied for the coverage that we were trying to get for you.
So we have a listener, Tissany, that is listening to the show right now, listening to you speak.
Mhm.
Your volume is kind of low. Can you speak directly into the mic and use your outside voice?
Okay, how about now?
Yes.
Okay.
Okay. All right. And so what happened? Continue on with that.
So once Mr. Johnson received this MIB report, I went back to his home residence
Mhm.
and we went over it and I showed him why he was denied for that coverage at that particular time.
Mhm. Wow.
Mhm.
So you did get him written up for standard.
Yes, ma'am. He
Oh,
got
okay.
approved for a standard plan, which is great.
Mhm.
It wasn't preferred as what I was hoping for,
Mhm.
but the good thing is he was still able to get coverage, immediate day one coverage, and there was no waiting period, which is important.
All right. And so the standard, again, I asked this question, is it higher than the preferred?
So depending upon, and it's a little bit difficult to answer that because again, insurance is based on your age and health.
Mhm.
So this particular gentleman, he was 71 years old and he got approved for a standard plan. Um, it was just a few dollars more than the preferred plan. And to be exact, it was $2.36 more than the other plan I was trying to get him approved for.
Okay. That's not a whole lot, but it does add up.
Mhm.
All right. So Tiffany, why should we consider the insurance gap?
So the insurance gap is the name that I am using to promote because I want to be able to help you understand
Mhm.
and I want to be able to fill that gap of not having insurance. Now, so if you're saying why choose me as your licensed independent broker, and it's because I don't work for an agency. I work directly for the client. I work directly for you. And when you look at it, you say, well, what's the difference between an insurance agent and a broker? Well, an insurance agent, for example, is kind of like Jake from State Farm,
Mhm.
where that agency cuts his check every week.
Okay.
The licensed broker has the ability, and I work directly for you. It is my ultimate responsibility to ensure that I'm there for you. I have the ability to shop for you. It's just like if you wanted a particular pair of shoes, looking at you, your style, you look like a lady, a variety. You're not going to go in the store and pick up a standard black pair of shoes every time, right?
Correct.
Exactly. So it's my job to be like your personal shopper as an independent broker to take care of you.
Okay. And you've been in this area for how long?
So I moved to North Carolina back in 2005.
Okay. In this area of North Carolina.
Mhm.
All right. And you moved here because of work or because North Carolina is a great place to live?
Well, my husband is from here. So we had come down Easter to visit, and my children absolutely loved it. They absolutely loved it. I mean, we grew up in Brooklyn, we lived on the fourth floor walk up. My son at the time was about 5, and he played outside. I mean, to me, it was like the cutest thing ever. It was the first time I seen a grass stain. Now, that might be small to you, but I'm gonna tell you, we grew up in a concrete jungle. It's concrete all around, or there was tarmacs. But to see that little boy actually go outside and play and roll around in the grass, it did something to me.
Wow.
So when we got back to New York, it was like outside, mommy, and I was like, you want to go to the store? All right, come on, let's go to the store. Right, I took him to get some ice cream. We came back, not satisfied. Outside, mommy, I want to play. And I was like, okay, let's walk to the corner and come back. you know, still was not satisfied. So we looked at the little trike that he had. Mind you, we have about the fourth floor walk up 4 times at this point, okay? And he said, I want to play. I want to go to the park. And I was like, oh my God. Okay, we gotta move. I told my husband, I said, listen, we gotta move. And he was like, are you for real? I said, yeah. I said, it's not for me. Trust me, it's not for me. It's for the sake of these children. And I want my children to have every opportunity that's out there for them. And I don't think that was something that we could have done in New York.
Outstanding. All right. So 3 types of insurance: whole, term, and universal. Have you gone over the universal?
Yes, I did. So remember, the universal is the one that's associated with the stock market. It's tied into the S&P, and that is going to determine your growth. How often you see the market fluctuates. We had stock market crashes back in 2008 and in 2020. And if you have a portfolio that's associated with that plan, then it depreciates over a period of time. And we can talk about that too a little bit more detail also in the next show.
Okay. All righty. So universal is tied to the stock market. So then I don't think I want to do universal if I were to purchase insurance because it's up and down, up and down, up and down. And so that mean too that my price rate will go up and down. It won't be the same every month.
So it will be the same every month, but what happens is they'll send you out an annual statement that shows you how well your portfolio is doing. They're going to show you growth and losses. Essentially what happens is that plan is designed to help you if you want to build a larger cash portfolio, right? But what happens is in the long run, after you had it for a longer period of time, then it loses cash value. So what happens is your cash value, instead of it going up and up and up, it starts depleting because now the face value policy is going to cost you more over a period of time. So now you find yourself here leveling off between your cash value and your premiums. So now once your cash value is depleted and your monthly premiums begin to increase, then the policy starts eating away at each other. So therefore your cash value is depleted, which is why I kind of like whole life, because whole life is a little bit more stable. You know how much cash value you're going to build. And then there's an illustration that comes with your policy that's going to show you how much cash value you're going to be building over the course of a period of time while you have your policy.
Okay. And so whole life, in your opinion, as a professional insurance broker, whole life is better.
Yeah, I like whole life.
Okay. All right.
But now I don't force it on you. So here's the thing with me. And again, this is what I talk about, how when I meet someone, I take you in as family because I want to be able to, and I meet you where you are. If you say to me, Ms. Atkinson, I like the sound of the whole life policy, but right now I can only afford this amount per month. What can you do to get me qualified or approved for insurance where I can pay this amount? So again, I'm looking at your budget. I'm helping you determine how much you can actually afford to pay for insurance on a monthly basis. That's more important to me than anything, because when I leave your house, I still want us to be friends and I want to acquire this family.
Okay. All right. So how can someone get in touch with you, Tissany?
So you can get in contact with me in multiple ways. You can call me directly, 252-367-8359. You can also text me at that same number, 252-367-8359. You can look me up on Facebook. That's Tissany, T-I-S like sunshine, S like sunshine, A-N-Y, Campbell Atkinson. And I have a YouTube channel that is Let's Talk Insurance with Tissany. So you got both ways to look me up.
All right. And give that phone number again.
252-367-8359.
Okay. So we have about 5 minutes left in today's show. Let's talk insurance with Tissany. All right. So Tissany, explain to me again, why is it so important for us to have insurance, especially African Americans?
So a lot of us within our community has not been educated about the importance of life insurance. Now, depending on where you grew up or your family sources, it was something that we talked about. We didn't talk about how we could have financial wealth. We didn't talk about the importance of having it. Now, grandma would have said, Akila, make sure you have some insurance. but she didn't tell you what type of insurance to obtain.
Mm.
So I want to be able to help you understand that life insurance does not help pay for your final expense. It does way more than that. I want to be able to teach members of our community how you can take advantage of your life insurance policy while you're still living.
Okay. So can I borrow off of that?
You can. So your whole life insurance policy does build cash value. Over a period of time, you can use that cash value if you need to in the event of an emergency, or if you will purchase a new home, if you want to buy a new car. And also, children's whole life policies can act as a college savings fund for your young children. So, and by that, what I mean is if you get a children's whole life policy, it builds cash value over a period of time that you can use that money to help fund your college education for your children.
So then if I take this money to fund my children for college,
Mhm.
or if I borrow off of it because of whatever emergency that I'm in at that time, doesn't it decrease then my my value on the insurance? So if something were to happen to me, and if I have $50,000 and I borrowed off of it, and also put some to my children's college education, then will I still have that whole 50,000?
So what happens is the amount of your cash value come off the face amount of your policy, and you end up having to pay that loan back. Okay. Now, in the event you don't pay that money back, then sometimes you typically will not have a policy at that face amount of the policy that you applied for. So let's say if you're a $50,000 policy and you borrowed 1,000, your face amount of that policy is no longer 50,000, it's 49,000, unless you pay back that loan.
So I'm paying back the loan each month and also my premium on my insurance.
Correct.
Mhm. Okay. So then if I don't pay back that loan within a certain amount of time, am I given a time frame to pay back the loan?
So depending upon the insurance company that you're dealing with, they'll give you a specific time frame to pay that money back. Now, in some instances, if you had it a long period of time, they'll take that loan amount that you've gotten and divide it over the course of a 12-month period. So this way, the next 12 months, or within that year or so, that money is paid back, and then your face amount of the policy is still the same.
So then the insurance company is acting as a bank, and this is for whole only or whole term and universal?
This is whole.
Okay.
Because
So
remember, and universal as well. Remember, term does not build any cash value.
okay. So whole and universal. So is it really beneficial then that I do have cash value? Because it may be tempting to me to borrow off of my 50,000 life insurance policy.
And that's going to depend upon how much cash value you have available in there.
Mhm.
And then it's going to depend upon the emergency that you have that you actually need it. I don't think that the amount that you borrow from within your policy
Mhm.
should be your first resort.
Okay.
And the reason I say that is because a lot of times, you can qualify for a first time home buyers program.
Mhm.
It may not require any down payment money, or if you say, well, I have a home that I want to be able to purchase. I have this money built up in my policy, can use it. You can, but just be mindful that you want to be able to pay that money back within a certain time frame.
Mm.
And then we have other policies as well that offers a return of premium, which we're going to talk about in the next show.
Yes, because we're winding down in our time. We thank you, our awesome radio viewers and watchers on our social media platforms. This is Awesome Radio. Let's talk insurance with Tissany. Join her here every second and fourth Saturday at 2 o'clock as we get to be educated on insurance, whole term and universal. Tiffany is also delving into more insurance um, arenas, and we will get to know about that in times to come. Thank you, Tiffany, for being with us on today to educate us the importance of having health insurance. You're listening to Awesome Radio. Join us back here at 3 o'clock today for Black History and Winterville.
Partial funding for this program. The insurance gap, filling the gap of your insurance needs.
Radio. So Tissany is still with us, and let's talk insurance with Tissany. If you have any questions, comments, or concerns, you can put it in the comment section, and we'll be able to see it. All right, Tissany, any closing remarks?
Well, I just wanted to say we didn't have an opportunity to touch on the fact of why I started a career in insurance, but we'll touch on that in the next show. But again, I am here locally in the Pitt County area. And again, I have a car with gas and will travel wherever you are. Now that service, and I'm so serious about this, the service is a free policy review. I want to make sure that you are getting exactly what it is that you're paying for, because that's important. You know, I may not have the ability to right the wrong, but I would like the opportunity to be able to serve you and make sure that you're getting exactly what it is you're supposed to have and what you're paying for, because that is important.
All right. Well, okay. Well, thank you so much, Tissany. We'll see you on the next time for Saturday right here on Awesome Radio. Let's talk insurance with Tissany. Thank you so much, social media, for joining us on today.